How sterling do the numbers need to be from Microsoft and co this week to reassure the markets that the AI theme is still there?
It is harder for the tech earnings this week to impress than it is for them to disappoint. I think the narrative has slightly changed. People are generally buying into the idea that the AI hype is real in terms of long-term changes and impact on how we're going to work over the next couple of years. But I think there's a little bit of worry that in markets terms, the growth in earnings narrative has got a little bit of ahead of itself for the next few quarters. People have realized that the growth in earnings is there to some extent, but maybe not as widespread as maybe they were thinking only a few months ago. Meanwhile, there's a real cost component coming through. So I'm not expecting earnings to necessarily be disappointed this week. In fact, I think earnings will remain overall strong in this quarter. But I think that it's going to have to be something really special to get people excited for the next leg up in AI-related stocks, and given the amount that we've already priced in exuberance already. So I think that's where the weakness is for this earnings season.
Well, so that's the stock story, Mark. Let's talk a little bit about the more macro kind of central bank story as well. It feels like the juiciest decision this week may come out of the BOJ, but does it really change the dial for the yen? What do you think?
I think it will, actually. I think it might do. Look, it's definitely the exciting one. Look, you know, Kriti, that my theory is the BOJ always disappoints and confuses, and I expect that to be the case this week. Even if they hike rates, it'll be clouded in such a message of dovishness that I think that we can get back into the yen depreciation trade likely after these central banks out of the way. Obviously, there's a lot of uncertainty around that decision, and you don't want to get too aggressive before those meetings. But I think that is where the risk reward is. You've got to remember the fundamentals of Japan are this is a country with a stagnant economy still, despite deeply negative real yields, still not sustainable inflation, still not got the resources in a world where commodities are generally bid. So it needs easy policy, can't hike rates. It has to pay the bill for its large debt pile through vast currency depreciation, and that process is not fully played out. So I think that likely all we're seeing is better levels to sell the yen for the longer term.
Mark, on the question of sovereign debt levels, and I'm thinking of sovereign debt across the Eurozone, is there a case to be made, but maybe sovereign debt in the Eurozone around the periphery is a little vulnerable to the data that we get today? Where's your lens going to be when it comes to the eco data of Europe today?
I think what's interesting is, today is the day we get excited about eco data before the earnings, before the central banks are on this week. But we're only going to care for a little bit. It's the fact that Europe never has the exciting story in a positive way anymore. It doesn't have the AI trend. It doesn't have a big commodity resource story. It doesn't have exciting growth. It doesn't have exciting structural reform. It doesn't have exciting demographics. The only time that traders sustain interest in the Eurozone is when there's a crisis or when there's a negative story or when there's political uncertainty. So you know what? I'm looking at Euro as very much a tactical story, not something strategic. It's not the big thematic one for the year ahead.